Hi everyone, let's go over my bullish and bearish Elliott wave scenarios on Bitcoin, starting with the bullish scenario where we're looking for a wave 1 or A, 2 or B, and then a wave C or 3 towards the upside, at least taking out the high of wave 1 or A. The common target area for your wave 2 is between the 05 and the 786. Taken from the low to the high of wave 1, giving you a target between 60.4k and 59.2k, which is where we are at the moment. The common target area for a wave B is a little bit bigger, the 382 to the 886, 60.9k to 58.8k. We then want to see signs of strength in this area and price moving to the upside in wave C or 3, where we do have some very interesting resistance, which is the blue box here between 64.1k and 65.1k, more specifically the weekly naked point of control at 65.1k. You can see we are currently also at support, the blue box here, 60.2k to 60.4k, and just below the candle here we have also a white box, which is a 1 hour gap on the chart, which is between 59.6k and 59.9k, nicely in confluence with the golden pocket. Inside this wave 2 or B, we are then looking for a 3-wave corrective structure to the downside. In this case, we are labeling this structure as a zigzag in a 5, 3 and a 5-wave move in an ABC. The common target for your wave C is between the 1 and the 1.618 trend-based fib extension taken from the start to the end of A to the end of wave B, giving you a target between 60.4k and 59.2k. Currently working on this wave C, we could have a couple of 4-5s during the weekend, which is ideal weekend price action, because generally in the weekend price is going nowhere, it is going sideways, and in this scenario you could have 4-5s, and wave 4s tend to be sideways complex ranging structures, which would be a perfect scenario for this weekend. And a couple of 4-5s here is thanks to the couple of 1-2s that the move then started with. Wave 1-2, 1-2, 1-2 in white, 3-4, trying to end this wave 5 over here in white, which therefore then ends wave 3 in blue, looking for a sideways range in 4, another move down in a wave 5 to finish the green wave 3 here, another move up in 4, and then eventually a final leg down in the green wave 5, finishing your wave C, looking for signs of strength locally and a move towards the upside. If we then look at a couple of bearish scenarios, then of course the most bearish scenario is that your correction here is finished and you're looking for an impulse down in a 1, 2, 3. However, wave 2 here hit the 886 taken from the start to the end of your wave 1, which significantly reduces the probabilities for a wave 2, as the 886 is rare for a wave 2, common for a wave B or a wave X, which therefore decreases the probabilities for this scenario. A second bearish scenario to finish a 3-wave corrective structure at this high is a sideways double combo, a WXY. Now wave W can only be a zigzag 535 or a flat structure ABC. You can see that clearly this wave W here moved towards the upside and does not look like a flat structure. So therefore we are counting this then as a zigzag in a wave W. We have a wave X here, 3-wave structure. And then because wave W is a zigzag, wave Y in a sideways double combo cannot be a zigzag, has to be counted as a flat A, B, and then a wave C towards the upside. But as explained during the live stream, as price was moving to the upside as well on Thursday, this move to the upside looks very much like a 3-wave structure, not a 5-wave structure. And if we look at a flat ABC, we want wave C to be a 5-wave structure. So it does lower the probabilities of this particular scenario. Finally then, we have the potential for a triangle. Here we have a finished triangle in a wave A, B, C, D, E, and then look for an impulse to the downside in a 1, 2, 3, 4, and then eventually a wave 5. Actually, I have to move my numbers a little bit to the downside now, as price has moved towards the downside, as you can see, but the idea is the same. So this is then going to be the structure that you are looking for. 1, 2, 1, 2, 3, 4, 5, 4, 5, bit of a range during the weekend, grinding towards the upside correctively for a wave 2, and then continuation to the downside. Of Of course, the most bearish scenario in that case is just continuation, where we have a 1-2, 1-2, possibly another one, and a move down. But it is weekend, and generally just before the weekend, you don't really start wave 3s, but it's all probabilities. It doesn't really have the highest probabilities at the moment, though. Now, looking at the triangle, there is something going on with your wave B here, because in a triangle, 4 out of the 5 waves has to be a simple zigzag structure, which is a 535 ABC up or a 535 ABC down. If one of the waves is not a simple zigzag structure, it is by far most commonly your wave C or your wave D. Now that means that your wave B has to be counted as a zigzag in a 535, but this range is very awkward in the middle of your second zigzag to the downside and also has a lot of overlap, as you can see. So it doesn't really support the narrative that this is a simple zigzag to the downside. A second thing I like to pay attention to is your wave D here, which also has to be a 535 zigzag ABC, but your wave C is very short. The most common target area for a wave C is between the 1 and the 1.236 trend-based fib extension that you take from the start to the end of A to the end of your wave B, but this second leg down did not hit the 1-to-1, so it does reduce the probabilities for the triangle. However, in both cases, both here in the triangle scenario as well as the bullish scenario that I have shown, we are looking for a bit of a range during the weekend and eventually a move up. Of course, in the bullish scenario, you end wave C and you move up impulsively, while in the bearish scenario, you're looking for a range and then a corrective structure to the upside. So that is the big difference between the two. Finally, if we look at the CVD divergences, then we had some bearish CVD divergences on the chart here. These have now played out. We also still have the bullish CVD divergences, as you can see, higher low in price, lower low on this CVD. However, with price currently moving to the downside on an increased amount of volume, I want to see local signs of strength. In other words, I want to see some local bullish CVD divergences. Price starting a range here, grinding to the upside, and some more local bullish CVD, because this one over here is not really important to me. I don't actually really use it. I want to see more local support because price is moving down on increased volume after bearish CVD divergences. If we then finally look at the probabilities of the different scenarios, then on the 1 hour time frame, currently the probabilities are higher for the zigzag scenario, the bullish scenario in an ABC or a 1-2-3. However, on the daily time frame, as explained in the live stream earlier and the previous video, the probabilities are higher to still look for some more downside unless price can really start to flip some levels. However, more locally here on the 1 hour time frame, probabilities are on the side for an ABC or a potential 1-2-3, but the ABC would have higher probabilities, with on the second spot a bearish scenario here where we are looking for a move and continuation to the downside to take out the low. On the 15-minute time frame, which is in more detail this structure here, the probabilities are higher for a zigzag at the moment in a 5-3-5 wave structure, looking for a weekend range in multiple 4-5s, and after that weekend range we then look for a retracement to the upside. And on number 2 we have a finished triangle A, B, C, D, E, where then we have an impulse to the downside. Now based on the volume we might be working on a potential wave 3, right, where we then have a 1-2, 1-2, possibly another 1-2, look for a bigger 3 towards the downside. That is then the goal in the bearish scenario. Or we look for a bit of a 4-5 corrective retracement continuation to the downside, but at the moment does have some lower probabilities. But in both cases we are looking for a bit of a move to the downside before then a retracement to the upside. In the bullish scenario you look to end a wave C and then move impulsively to the upside. In the bearish scenario you're looking for a range, corrective structure up, and continuation down. Also, in both cases, we want the volume locally to go down as price is making new lows. So I'm going to keep an eye on the volume over here. I don't want to see continuous bearish CVDs as well, as that of course increases the probabilities to just move towards the downside, right? So I will keep an eye on the CVD and the volume, because if we are looking for wave 4 and wave 5s locally in a potential weekend range, then what we want to see is price ranging and making new lows on lower volume. That is what we want to see in an impulse. An impulse 1, 2, 3, 4, 5. Generally, your wave 3 has the highest amount of volume. That's by far most common. And then you get a range in 4, another leg down in a wave 5 on a lower amount of volume. That is by far most common and something that I will pay attention to. That being said, I hope that this video was helpful or valuable to you. Please check out the brand new complete Elliott Waves guide playlist I've made that shows you all you need to know about Elliott Waves. Thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.